Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 27th of June, 2019. This is episode number 1545. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning seems like a slight risk-on sentiment. The Nasdaq's up 38.75 points currently, or 0.5%, followed by the DAX up 33 basis points. The Russell up 30 basis points. Uh, the the uh, the laggard today is gold. Gold is down $10.60, trading at $1,404.90, and crude oil's off slightly, about 0.5%. Crude's been on a tear. So that's where we stand. It seems like we are, I wouldn't call it risk on, risk on. I would call it slightly risk on for now. So that's where what the market sentiment is. What is likely to drive us today? The all eyes are on the G20. The G20 meeting. The focus is on the Trump Xi meeting and trade implications, risk sentiment buoyed by hopes of a truce between the two powers. Germany's regional inflation accelerated in June, and so that's keep a close ear on your news feed. U.S. GDP came out 3 point Q on Q came out at 3.1 versus 3.2%. Expected personal consumption came in at 0.9 versus 1.3 expected. Both missed. And initial claims came out worse at 227,000 versus 220,000. Continuing claims also. So that's where we stand at about 4:45 Central, 5:45 Eastern. China's President Xi said to President U.S. Trump, with terms for said to present U.S. President Trump with terms for settling trade fight, including precondition of lifting Huawei ban. Um, uh, President Xi said that he wants the U.S. to remove punitive tariffs, reduce demand for purchases, and that's where we stand. And so that's where the market is paying attention. Today, in terms of what is on deck, we did have business confidence from the Eurozone this morning, and it came in at 0.17 versus 0.23, missed again. Inflation in Germany year on year preliminary is higher, giving a little bit of room there for the central bank. And then looking ahead today, we have pending home sales expected at 10 o'clock, not a high tiered release. And then this evening at about 7:01 p.m. Eastern, Great Britain has its GfK consumer confidence for June, expecting negative 11. And so that's where we stand. Let's take a look at what we expected yesterday versus what we got. Yesterday, the expectation was for an open auction off the open and a skew down, and then like I said yesterday, there was no way for there was kind of a 50-50 chance that we would get a pop off of that 27, 29, 25 area, key area in this region. And if we get a pop, then we're likely to get tangled up at 36 with the aim of getting up to 29.41 or so. That plan didn't work out. What did work out is the pop to 29.30, the 30.31 area, for a push down into the 29.22, which is the MC point of control. It is the most traded price by volume, 29.2275. Expected it to get tangled there a little bit, and then expected the overnight low to be taken out and for us to make a trip down at 29.15 and potentially 29.10. You see that here. So top 29.30, 31, tangle 29.2275, expecting the overnight low to be taken out, expecting it to get tangled up in the 29.15 with a potential for a push to 29.10 to fulfill the range stats and the next big area down. Here's what actually happened. I'm not going to do a walkthrough. They take too long, but here's the open auction right here. Here's the push. It went to 36.75. It opened. It actually opened higher than where I expected. I expected it to open somewhere in here. That's where we were at the trader bite. It opened higher and it put in a top a little bit higher. The early top, which was the opening swing high, was 34, and it looked like it might head to that 41 area before failing, and then we get this very clean, clear impulse down early on. This piece right here, and that gives us an indication that we are focusing from the short side and we're looking to pull a trade against the mid wherever we end up going. And so we get the impulse, a very tight flag right there, very tight zipper for a continuation. It never actually tests up, but it does test up back here, and it provides an opportunity with almost a stop out to catch a rotation of about 5 points or so, and then it does it again back here before it breaks through the IB low. It gets into the 29.22 region right there. It gets into it. It gets tangled. That's what we expect. We expect it to get tangled, and then it breaks the overnight low and takes out. And it starts headed towards the. This is today's overnight low, not yesterday's. Starts heading towards the overnight low, which was 29.1750, and it takes it out right in here. Okay, so we end up pushing to 29.15. We actually turn the low is 29.1675. So and so overall, scenario 2 played well. It just pushed higher. It opened higher and pushed higher on the open. I didn't do anything with this at all, but there were a few opportunities throughout the day. Now we're watching this key low volume node area. The market is currently trading at 29.2550. And another again. This is a key area right here. The market's really tangled in the 22 to 25 area, and really trying to find some traction. Here's the thing, though. On a bigger picture basis, where's my composite? 1 second. Here it is. On a bigger picture basis, the daily shows that it's relatively bearish in formation. So let's adjust it here. So if we look at what's going on here, in fact, actually, you know what shows it better is market profile. So if we look at the market profile, we see that there's an excess here. The market opened at this O. This O is the open. And we see it pushing higher and putting in an excess string of TPOs right up here, right into 29, 32, 25, and then the rotations start to be to the downside with the market closing near bottoms. Okay, the market closing near bottoms. To me, this is a fairly bearish behavior. As long as it maintains and it doesn't get back into that excess, this is an excess that we left behind up here. A string of TPOs like this is really an excess. It shows that the market is found its sellers up in the 37 area, and then it started to rotate around itself for the rest of the session. And you could see that there's a little bit of confusion here. Period B rotates down, that creates an excess. Period C extends. Period D pushes higher, period E pushes even higher. So the one time framing down is broken right away. Then we start the one time frame down again. But if you look at the market profile, if you ever do look at market profile, you'll notice that these impulses like I period here are generally followed by a lower low in the next period. And that's where the idea behind um, impulse continuation trades comes from. But overall, the profile shows that there's an excess up here, and it finished weak on the day, in my opinion. And so we see this daily kind of pushing up against this 1550, which is that next stock zone area where we stopped here, pushing up against the 1550, and then beyond there, we're in the gap that we left behind. We left behind earlier this month. So overall, it just doesn't look like buyers are doing a good job of pushing higher. And so I believe that it is more likely to fail. It doesn't mean that we're going to sell on the open, but it looks like it is more likely to fail on any attempt higher. So that's the side that I'm going to be looking at on the bigger time frame. But as always, I'm responding to whatever the market gives us on the open. It may rotate down and then push up on an impulse, and that'll tell me that on the short time frame, I'm going to trade from the long side until it reaches that 32 area. So that's what I'm looking at. And that was yesterday. We have a normal variation day closing below the range, below the prior day's range. The point of control, though, shifted up. The market was accepting higher prices. The day before it was down here, and yesterday it shifted up. So even though we have a lower high, lower low, value is telling a different story. It's telling us that actually the participants really liked higher prices the most yesterday, and that's another thing that kind of throws a little friction in the sellers in the selling march downwards in the ES. Okay, so just pay attention to those little details. Taking this into the overnight session, what is going on here? Taking this into the overnight session. The overnight session really just opened, dropped, and drifted up throughout the European session until the numbers out of Europe came in, and we also got the news. This is about when we got the news on Xi's offer to the U.S. To work out a solution for tariffs. The market popped a little bit, and it took it right back, and we're now tangled on top of the point of control, mid and VWAP on, it's not really a balanced profile, but actually it kind of is. The market really battled out these prices, but we have somewhat of a Gaussian distribution here. And so what the market's telling us is it's in equilibrium. It is balanced for the moment. So just pay attention to that. As you're coming in, it is likely to cause crosswinds. So if you're a big player and you're looking to buy, you may see these prices as advantageous. We checked the 29.15 area. We're off of it by 10 points. We have a balanced profile overnight, higher point of control. This could be pretty good territory for somebody to start accumulating on a long-term basis to the push to the high side. So the overnight session is not offering us more than to say that it was fairly active with 252 contracts, 1,000 contracts traded in the extended hours on a balanced profile inside of the prior day's range. The test below yesterday's low, which is this green line, the test below yesterday's low didn't stick there very much. The inventory is mostly long this morning, and so that's what we're heading into for today. So I know those are a lot of little pieces that I'm throwing at everybody here, but that's what builds our story or narrative or context. So what are we expecting for today? For today, I'm going to pay attention to, hello, I'm going to pay attention to the fact that, yes, so let's split this up into time frames. The bigger time frame, the daily time frame, is basically saying, look, we're one time framing down, lower high, lower low. Actually, one time framing in auction theory is just a lower high. We don't care about the low. As long as it could not exceed the prior high, then it's one time framing down. So we're solidly in a one time frame down situation. Okay. Uh, and so you have to pay attention to that. However, in a shorter time frame, from looking at the week and looking day to day to day, it's one time framing down. These sellers are winning this battle. On a shorter time frame, intraday, what we have is, as I mentioned, a higher point of control in a market that seems to be stabilizing, and that's carried over into the overnight session. And so we need to be cautious. We are tangled up against yesterday's mid, below yesterday's point of control, inside of the overnight point of control, inside of the overnight mid and VWAP. It's really a mess, and it looks best here on the volume scope chart. If you look at the volume scope chart, here's there's just a cluster of levels here. These boxes are different levels: VWAP, full session VWAP, full session mid. All these are clustered in here, and you can see there's a pretty even fight through this area. What is my point? My point is that I'm warning you that it could be a pretty noisy morning. There could be a two-way fight here this morning. My primary expectation is an open auction inside of yesterday's most accepted price. I'm looking for this to revert back to balance the inventory, to move towards yesterday's close. But by the end of the day, I'm expecting an impulse higher and an attempt to push into that 32 area. But overall, I'm expecting it to sit sideways. There's nothing really driving this thing except potentially for news out of the G20. The second thing you need to be weary of is that tomorrow is quarter end, semi-year, half-year end. Okay, the first half of the year ends tomorrow. There's likely to be a lot of adjusting, a lot of positioning, and there may, I haven't looked, but there may be some adjustments I think that are due into some of these indices. Things like Beyond Meat coming in to, I think it's the Russell or something. So there may be some shuffling here at the end of the first half, and the close on those in that environment, the closes in that environment could be quite volatile as hedges are put on to protect to window dress and protect new positions. The secondary scenario is an open auction that tests down, impulses up, unable to get through that 32 area, and then continues the one time frame down and pushes us into the 29.10 as expected yesterday. Somebody's pumping the brakes on this. In other words, the action on the sell side is coming off a little bit. If you look, I'll put this on in the corner. But if you look at the overall volume delta, you could see that yesterday the volume delta for the ES, for the very large lots, 100 lots, they stayed positive through most of the session and finished positive. It's the small lots, the 9 lots or less, that were strong sellers throughout the session, but it seems to me like money's stepping in, the bigger orders are stepping in to buy a little bit. So this is why scenario one's looking for balance. Okay, so anyway, it's a lot to process there, but that's what we're looking at. In terms of order flow, let's switch this over. In terms of order flow, it's really noisy. Not seeing anything spectacular. I do see some liquidity that's been sitting there down at 29.10. It's been sitting there a long time. I do see liquidity in that 29.40 area. There is no liquidity in the 32, 31, 32 reaction area, the value high. Not seeing much liquidity there. That may change after the open, and definitely seeing some pretty strong liquidity up in the 43.50 to about 45.50 area. So these are the kind of the key order flow areas that we know of where somebody has a resting order. Does that mean the market's likely to bounce from there or resist in those areas? It does not. It could chew through it. But when these collide with my stock zones or areas of interest, it makes for a decent opportunity from the way that I view things. Okay. Good luck, and I'll catch you tomorrow. Take care.